Your neighbor is about to get a $12,500 tax break, and you're going to pay for it because nobody told you. From April 2026, the US and German governments changed the rules. Not loudly, not on the news, quietly. The people with expensive accountants already adjusted. The people watching this video, they're about to. I'm going to give you, in the next 12 minutes, every rule, every number, and exactly what to do. Let's go. USA, Rule 1, the $600 trap. Let me ask you something. Have you ever sold something on Facebook Marketplace? Done a small job and got paid on Venmo or Zelle? Delivered food? Tutored a kid? If the total crossed $600 in a year, the IRS already got a report. Automatic, no warning. Now here's what most people do. They panic, they pay, they move on. Here's what you're going to do. Your internet bill, that's a deduction. Your phone, deduction. A corner of your room where you work, deduction. A good accountant can take that so-called taxable side income and bring it to almost zero using perfectly legal business deductions. The IRS wrote these rules into the code. They're available to everyone. Most people just don't know they exist. USA, Rule 2. Tips are now tax-free. This has never existed before in American tax history. If you earn tips as a server, a driver, a hairdresser, a nail tech, a delivery person, up to $25,000 of your tips per year may carry zero federal income tax. Zero. Someone earning $800 a month in tips, that's $9,600 a year, could owe nothing on it. This is in active legislation right now. If you know anyone in this kind of work, your daughter, your brother, your friend, show them this video today, not tomorrow, today, because this window doesn't stay open. USA. Rule 3. Overtime deduction. Every extra shift, every weekend you gave up, every holiday you worked, your government taxed your overtime at the highest rate. But now, workers can deduct up to $12,500 of overtime income from their taxable earnings. Nurses, truck drivers, factory workers, construction workers, the people who actually build this country, this rule was written for you. Check your pay stub right now. If you see OT, your tax advisor needs to know about this before you file. USA, Rule 4. Seniors get $6,000 extra. Americans who are 65 or older get an additional $6,000 standard deduction in 2026, on top of the regular one. For a retired person living on a fixed income, this single number can flip their entire tax picture, from owing something to owing nothing. But here's the tragedy. Most seniors filing their own returns have no idea this exists. They are paying money they legally don't owe. If your parents are 65 or older, send them this video. If your grandparents are 65 or older, sit down with them and help them file. This is real money. Don't let it disappear. USA, Rule 5, car loan interest deduction. The average American pays between $2,000 and $4,000 in car loan interest every year. Now, if your car was manufactured in the United States, that interest may be fully deductible up to $10,000 per year. One condition, made in America. If you don't know where your car was made, Google the VIN. Takes 30 seconds. If it qualifies, that's potentially thousands of dollars less in taxable income this year from a car you already own. USA, wealth secret. Here's something most employees will never hear from their boss, or their bank, or anyone. When you earn $100,000 as a regular employee, you pay income tax and a 15.3% self-employment tax on every single dollar. When someone earns the same amount through their own small business structured as an S corporation, only the salary portion carries the full tax. The rest flows out as a business distribution. No 15.3% on that. On $100,000 of income, the saving can be over $9,000 a year. Setting up an S-Corp in most states costs a few $100s. The people who did this in their 30s are not lucky. They are not smarter than you. They just knew this. Now you do too. Germany. Rule 1. Aktive Rente. You worked for 40 years. You earned your pension. And now the German government is paying you extra to keep going. It's called Aktive Rente. If you've reached retirement age and you still want to work, you can now earn 2,000 euros per month with zero tax on it. That's 24,000 euros per year. Tax-free. On top of your pension. Germany needs skilled workers so badly that they are literally offering experienced people a financial bonus to stay. If someone in your household is over 63 and still able to work, call them tonight. Germany. Rule 2. Mini job. A mini job in Germany is the cleanest money you can earn. No tax, no social contributions. The money lands directly in your pocket. In 2026, the monthly limit has been raised to 603 euros, and the minimum wage is now 13 euros and 90 cents per hour. This works alongside a main job, with no effect on your primary tax bracket. Students, parents working part-time, retirees doing small jobs, this is real, tax-free money, and most people aren't using it. Germany. Rule 3. Kindergeld. Every family in Germany with children is entitled to Kindergeld, a monthly government payment for each child. No competition, no income limit, just registration. In 2026, it has increased to 259 euros per child per month. 2 children, that's over 6,000 euros per year, tax-free. 3 children, over 9,000 euros. And here is the part that is truly shocking. Thousands of eligible families are not claiming this. Not because they don't qualify, because nobody told them how to register. This is especially common among families who move to Germany from abroad. If you live in Germany and have children, stop this video right now. Google Kindergeld Antrag and fill it out today. Germany. Rule 4. Electricity bills. New government subsidies have reduced average household electricity costs in Germany by around 17% in 2026. For most families, that is a saving of 300 to 400 euros per year, without changing anything about how you live. But here's the trap. In Germany, you pay electricity in monthly advance installments and settle at the end of the year. If you're still paying last year's rate, you are giving your utility company an interest-free loan. Call them. Tell them to reduce your monthly payment. One phone call, one time. Keep that money now. Germany. Rule 5. Steuerklasse. Germany gives every worker a tax class, a Steuerklasse, that decides how much is deducted from your paycheck before you ever see it. Married couples chose their combination on their wedding day. Most never changed it, but your income changed, your partner's income changed, life changed. And that tax class, the one you picked years ago, might be costing you hundreds of euros every single month. Not from a pay cut, not from new taxes, from one wrong box on a form you filled out when you were a different person. Go to your Finanzamt, ask for the Steuerklasse change form. One visit, one form, potentially over 1,000 euros more per year in your paycheck every month. Germany. Wealth secret. Germany's inheritance tax can reach 30% or more. When a family passes assets, property, investments, business shares directly to their children, a third of everything built over a lifetime can disappear in a single moment. Germany's wealthiest families solved this generations ago. They set up a Familienstiftung, a family foundation. The family's assets sit inside the foundation. The foundation does not die. So there is no inheritance event, no tax trigger. Family members receive yearly distributions, taxed as income at a much lower rate. In 2026, with updated thresholds, more families qualify for this structure than ever before. This is not a loophole. It is written into German law. It's just only ever explained to the people who can afford private wealth advisors. Until now. Closing. Look at what both countries are doing. They're not hiding this information. They're just not explaining it. The worker who knows about the overtime deduction keeps an extra $1,200. The one who doesn't pays it. The German family that registers for Kindergeld gets 6,000 euros a year. The family that doesn't gets 0. Same income, same country, same laws, different outcomes. Because of one thing, information. These windows don't stay open forever. The US overtime and tips rules are in active legislation right now. Germany's Aktivrente is already live, and millions of eligible retirees haven't activated it because no one told them. 6 months from now, your neighbor will tell you about this. A year from now, it'll be everywhere. But the advantage belongs to the people who move first. That's you, right now. If you learned one new thing from this video, drop a comment, USA or Germany, and subscribe, because the next video covers how the wealthy in both countries legally pay close to 0 tax. That one will change how you see money.